Let's shift focus now to another sector, the real estate sector. Joining us now is Pirojsha Godrej, Executive Chairman at Godrej Properties. Pirojsha, good morning and thank you very much. I hope you're staying safe. Not a great day in Mumbai, the way in which the city is getting rocked under the floods. Just wanted to ask you, how is the real estate market doing in the past quarter? We're almost at the end of the second quarter. Did you see any improvement in people asking for buying homes?
Good morning, Lata. I hope you, your colleagues and all your viewers are staying both safe and sane amidst all this craziness. I think the property market has obviously been badly hit by this, and I think it's important to keep in mind actually that the property market was going into this very weak. So we were already at the back end of a sort of 7-year downturn in the property sector. So there's no question that this has had a further impact, particularly on developers whose balance sheets were under pressure. But I think we have seen some improvement, and what's been very encouraging, Lata, is whether we look at evidence from global markets like China and the US, which have seen home sales pick up, whether we look at our own sales traction, where we've seen growth year on year in both the first quarter, and we expect to see that in the second quarter, or when we see research that third-party analysts as well as our own teams are doing, the intent to pursue home ownership is actually increased, I think, as a result of this, which doesn't surprise us that much, because if you think about the kind of psychological impact this last 6 months has had on all of us, I think the security that home ownership offers has kind of gone up in value. Now, of course, that is countered by people's insecurity, people's economic uncertainty. Certain people have lost jobs. A lot of people have faced salary cuts or no increments. So I think there is obviously a lot to unpack here, and it's unclear how this all will play out. But our sense is that the residential real estate market should actually do okay. I think we're in for a tough year this year, no question. But as we look forward, our sense is demand metrics should improve. And another factor that will drive that is affordability. While people have a lot of economic insecurity, it's important to remember that affordability of real estate going into this was actually the best it's been in many years, with low interest rates and flat property prices, and interest rates have further reduced, and property prices certainly haven't gone up this year either.
Yeah. Actually, I'm sure Sonia has a lot of questions where she will want numbers on flat realizations, flat prices, volumes, etc. But I have just one question, because I had a conversation with a financial sector guy. There are a lot of housing finance guys who have lent to developers and who are willing to sell those loans at a discount. Would you be a buyer? Because there are very few very healthy real estate guys. You would be one of them.
I think, Lata, a big source of our business development really for the last 2 or 3 years, so not just post-COVID, has been these kind of projects where there are three-party discussions, ourselves, the erstwhile developer and their lender. And, so I think that has been, as I said, a source of deals for us for quite some time. We are not interested in purchasing the financial loans of the third party, but we may be able to inject capital and take over the project and become the developer in such situations. And certainly I do think that's one of the opportunities, because really there's no question that even for us, the short-term impact of this COVID situation on in-year earnings, in-year cash flows is going to be quite significant. But there is also a huge opportunity for the leading players getting thrown up in terms of market share gains through consolidation. And that has been something we've been seeing over the last 5 or 6 years. But this might be the final nail in the coffin for many developers. So we do expect to see that process gather further momentum.
Okay. Pirojsha, hi, good morning. I wanted your thoughts on this whole ready reckoner rate going up in Maharashtra. Will it really be a very big impact? I mean, I know on paper it sounds like, an onerous task, because it's going to mean costlier properties, higher project costs for builders. But I wanted to understand from you, what would the impact of this be, and will it really impact demand?
Sonia, I don't think, it's a very, very marginal increase that's been brought about, so I don't expect any major impact. That said, I do think it was quite unfortunate, especially in light of just a week or two before this decision was taken. The Maharashtra government took the very intelligent decision to lower stamp duties in the state. And I actually think they executed that with a very good design, because what they did was not just lower it indefinitely, but lower it for a specific period until the end of the financial year, creating therefore an incentive for those home buyers who are sitting on the fence to actually act and transact. So I thought that was very intelligent, but then to follow that up with this increase in ready reckoner rates seemed a bit contradictory. I don't expect it to have much of a negative impact, but I think there was an opportunity to signal to the market to get developers' animal spirits going, to create liquidity for the sector, which of course has many follow-on benefits to the overall economy and for job creation, given that construction is the largest source of jobs in the country behind agriculture. So I think it was a missed opportunity, but I don't expect too much of a negative effect on the sector from it.
So you started the conversation by saying that this is going to be a very tough year for the real estate sector. Can you give us some numbers for Godrej Properties? Will you be going slow on new launches? If yes, what is the launch pipeline? Also, in terms of project completions, will it be slower than what we saw earlier? I mean, during the lockdown, of course, there was nothing, but now is it still very slow?
So Sonia, I'd break the question into two parts. One is, what are the reported numbers going to look like, and how are the operations moving? And actually, I think the two, for at least Godrej Properties, are painting quite a different picture. Operationally, we're actually quite happy with how things are going. We saw a 70% increase year on year in sales, even in the first quarter, through, I think, some good agility the team demonstrated in switching to digital sales mean and coming up with the right payment plans and things. And we actually expect to see bookings for the full year grow over last year, which I think will be a good accomplishment given the challenging environment. We're also seeing a good return to normalcy on the construction side. So obviously, as you rightly pointed out, construction had come to a complete standstill in the first quarter. And while we'd actually managed to retain about 70% of our construction labor on site through the lockdown, as things started opening up, a large number of those construction laborers returned to their hometown. So we saw that number of 70% go down to below 30%. I'm happy to report actually that over the last couple of weeks, we've seen that number now go past its pre-COVID number. And, we had earlier estimated it would probably take until about December to get to that milestone. So I think operationally, we see things on track. That said, from a reported numbers perspective, there are going to be two significant hits to keep in mind. One, the accounting system for real estate depends on projects being completed before any revenue is recognized in those projects. And clearly, we think we've lost about 6 months of construction schedule with things only returning to normal in the last month or two. So essentially, this year we have half the time that we would have had at the start of the year to complete projects, and therefore, our initial plans on project completions for the year have gone for a complete toss. Similarly, cash flows, which are dependent on achieving various construction milestones, the number of such milestones that we've been able to hit and will be able to hit during this year will be significantly reduced over initial expectations. So I think there's been sort of a 6-month postponement of performance, which I think will reflect in poor earnings and cash flow numbers this year. But really, to our minds, no change in the medium-term prospects. If anything, I think the ability to gain market share and do it faster has sharpened. For example, there's no question that the first quarter was our highest ever market share, because in a market that we think reduced by more than half, we were able to grow sales by 70%, thereby probably quadrupling or more our market share.
Okay. Actually, that was going to be my question. Just some more concrete numbers, How much are your sales compared to second quarter last year? Just to get an idea of, are you 50% normal, 60% normal?
No, we're tracking, Lata, well ahead of last year. So in the first quarter, our sales was 70% higher than last year. And by sales, I mean bookings, not accounting revenue. Yeah. Our bookings were 70% higher than last year. We're, of course, towards the end of the current quarter, so I can't comment on it till we complete the quarter. But we're tracking certainly for the first half of the financial year well ahead of the first half of last financial year from a bookings perspective.
Just a very quick word on cash flows. I mean, are the people who have booked homes giving in their tranches at the right time? Is there a mismatch?
There's a little bit of a mismatch, Lata, but nothing too concerning. I think it was more in Q1 where people were kind of waiting and watching. And the bigger impact on cash flows has come from the fact that we were unable for a large number of months to hit construction milestones because of the lockdown and then the gradual ramp up from a labor perspective. So I think that constraint, it was more a supply constraint than a willingness to pay, but certainly there is some percentage of customers that are being more slow to pay. But I think we're seeing that return to near normalcy, both on the construction labor, which, as I mentioned, just this month for the first time, we've now crossed our pre-COVID labor strength, and also on customers recognizing that they must pay, and also expecting, I think, customers' confidence in the real estate market is also much better now than it was in April and May.
Okay, good. I don't think that was a problem with your company anyway, but some of the builders, of course, did face that issue. Pirojsha, it's been a pleasure speaking with you. You've also bucked up our spirits that the sales are better, labor's returned, and now you are functioning at higher than pre-COVID levels. That's always good to hear. Not too many sectors are able to boast about it. But some parts of the market are listening to it, some parts are not. The mid-cap is still doing well. The index is up 0.6. But the banks are showing a bit of bother. And at least from what I heard yesterday,